So we're here today to talk about embedded finance, and like when I kind of think back of embedded finance and the history of it, I think about some of the pioneers like Sears and Kmart that were doing layaway programs. But since then, 30 years ago, it's come a long way, and now we have open banking. It's a lot more complex. So today we're going to focus more on the open banking and open accounts and talk about that. But and then we'll do a quick intro. So my name is Joe Kesmerick. I'm going to be the moderator today. I work with a firm called RSM, which is the 5th largest professional service firm. So we do audit, tax, and consulting. But how I play in embedded finance is we have about $1 billion financial service practice. So we're helping a lot of our companies evolve and go through the process of digital transformation and help them with that innovation strategy. And a big component of that is embedded finance and helping them come up with that. But Walt, you want to go for it?
I'm Walt Granville. I head up embedded finance as well as our bank and network operations at NetSpend. And I think similar to what Joe was saying, our organization has been working and operating in the space for a number of years with a neobank product that we've offered and recently moved into the embedded finance space where we leverage the infrastructure of our organization to help other organizations either embed accounts in their applications or to create new solutions for their consumer bases.
John Squire, founder and CEO of a company called Card Free. We have a whole slew of payment products, which we'll talk somewhat about. Wallets, checkout, order ahead, and a loyalty platform. Really one-stop solution for merchants in both retail, restaurants, and hospitality in general. Core team was the founding team that did the original Starbucks mobile app, and as well as Dunkin' Donuts.
Hey everyone, Rob Pacifico. I lead product management for open banking and multi-rail payments at MasterCard. Pleasure to be speaking with you all today.
Perfect. So I think we have a pretty diverse panel here. So a lot of these questions I'm going to ask, I wanted to go across all three of you guys because I know you guys have different perspectives. So why don't we start out by just talking about some of the benefits of embedded accounts. So Walt, maybe you want to talk about that?
Yeah, I think my perspective on embedded accounts, and I think we were talking earlier about this, is if I were making a pitch to a CEO who knew nothing about embedded accounts and embedded finance, what would the value proposition to that CEO be, and why would they want to mobilize their teams to investigate it? And my view on it is that by taking a position where you're either setting up accounts or putting new tools in place for payments within your ecosystem, you're harnessing the power of the funds that are in those accounts, but also the tools that your customers are using, you get to control. Right. And I think the key to that, though, is, and why a CEO would be interested in that, is that the power of that control and of those economics really can drive the core KPIs for your business. Right. And so if you're looking to leverage those tools to drive more purchasing power or use of your service offering, that's one thing you could do. It actually will help you reduce your processing costs. It'll help you reduce overhead in many situations and refine your processes. But it also can help you with loyalty programs. It can also help you with a better workflow for your customers and streamlining the process. So I think from my perspective, I think taking control of that, harnessing the power of that, and then driving that to optimize your business and enhance your business is really the focus of an embedded payment account.
Right.
So sticking with the CEO, our market would be a little bit different, obviously. So a CEO of a casual restaurant, let's say 50 locations, this is the first time, probably in history, that restaurants could finally have a one-to-one relationship with their customer. And historically, it's an anonymous transaction. You don't know too much about the person. The card data is all on the other side. So in this use case, it's really about you get that one-to-one relationship with your customer, and this can be embedded, or it could be, later down the road, through your point, a loyalty registration, which is massive for them, being able to market to somebody, in our case, directly down, it'll sound a little creepy, but in their pocket over their mobile phone. And the second one would be the streamlining of financial costs, right? So for a lot of these guys, historically, the point of sale comes in with their own payment play, order ahead player comes in with a payment play, obviously like a debit card, a gift card, or somebody else is there. So they're really taking this bundle, if you will, and digitizing it and streamlining it down to one processor in a lot of these relationships. So there's a massive savings. That casual restaurant I referenced of 50 locations is going to save about $1.5 million in 2 years.
Wow.
Over just renegotiating the contracts and streamlining everything down to one API versus the 17 they had when we showed up.
Yeah, so broadly speaking, it's exactly right. I think the business case for embedded finance typically revolves around things like bigger average tickets, more loyalty and engagement, better conversion rates. But I also think a really big part of the message to a company should be, look, if you've done the very, very hard work of building a piece of software or platform that consumers or small businesses are using all day, every day to run their lives, then at this point, the task of adding on complementary financial services is fairly straightforward. And the financial opportunity associated with doing that is absolutely immense, right? If you're a software vendor, the total addressable market for software globally is something like $900 million. The total addressable market for financial services globally is 20 trillion, right? So it's 20x the software opportunity. And you really need to, I think probably one of the best examples of this is if you look at Shopify, who in their roots was a software company, right? That's where they started. But today, 70% of their revenue comes from financial services, right? And what that financial services revenue allows you to do is reinvest that back into the business, maybe subsidize your core software offering, which is going to drive market share gains, which is going to drive more financial services revenue that can be reinvested back into the business. And you have this really powerful self-reinforcing flywheel effect that can be, a really compelling, I think, business case to really take a close look at embedded finance.
No, that's a good point, Rob. And I think the big thing is like just the evolution of how technology has changed this market from the days of, with buy now, pay later, but even like before that, there was really no technology behind this. And with the evolution of this and everybody wanting to do this, or use this for all their transactions, it's really changed the environment. So maybe, John, you can talk a little bit about how things have evolved over the last year or two in embedded finance and the account opening and everything else.
Sure. I mean, the word embedded itself is making a resurgence, which is kind of bizarre. But
right.
I think, for us, we certainly see, to your point, there's a lot of new players trying to get into the space
right.
who historically have either gone public and they had a very specific revenue channel like order ahead, or they're a cloud point of sale provider. And unfortunately, are going back to the old model of, we won't name the other point of sale provider that's been around forever, but trapping people into, you have my hardware, now I want a hook for payments.
Right.
Don't really pay attention to that. Don't worry about the processing in the corner. We've got our hardware, we'll take care of you. And what that does is sort of dislodge, potentially for a lot of our partners, a roadmap and lock them into things where they don't have an open ecosystem and can't do the really cool things to keep up with the way things are going. So I think the biggest trend we're certainly seeing is around payments has become part of everybody's core platform in a weird way, right. Even though they may not be particularly good at it or well sort of suited to actually handle what that flow looks like.
And I think obviously one of the big trends, probably last year and years before that, is just it's getting faster, cheaper, and easier to get started, right? Not too long ago, probably took 16 to 18 months to launch an offering. You're probably looking at an upfront investment of $2 million. That's collapsed to as little as a few months and maybe $50,000 to get started, right? So I think that's a powerful dynamic that's in play. And then, as they always have and always will, competitive dynamics have driven and will continue to drive adoption. Because if you're a software vendor working in a particular vertical, you see a competitor starting to embed financial services, you're going to quickly follow suit, or you're going to start seeing some market share loss there. So I think that's a very nuanced, but I think a powerful driver of growth here.
I think the adoption of some of the services that have been sort of out there bubbling up to the surface over the last 2 years is what I think is changing the market, right? We've had, open banking for a bit of time. We've had embedded finance for a time. We've had the ability to move money in real time, but people are now putting those things together and doing it at scale. And I think that the change that's coming is that you're able to combine those things and create new applications and new use cases and solve new problems. As an example, I think the embedded finance and money movement, bill payment service offerings combined with SMS and a variety of other things that we're seeing sort of really become popular are driven from that. Those technologies have matured, they're adopted, and I think we were talking earlier about this, that consumers have become more familiar with them. At one point in time, if you were to ask a customer to give you their password and user ID for their bank account, that would be the red flag of all red flags. Shopping cart abandonment would happen immediately. But what we're seeing is people are becoming familiar with it. They're accustomed to it, and when they're in a trusted environment with a trusted brand, they actually feel safe, and there's a value exchange that's going to happen that makes it worthwhile for them. So I think we're really just starting to see this stuff take off, and the combination of those tools bringing sort of net new use cases to the market.
Yeah, and one of the kind of leading into our next question, I think, I get this question a lot, like what's the role of big tech, and can we really compete? A lot of my financial service companies are like, well, how do I really compete with Apple, Amazon, and these guys that are trying to take over the world? But I guess maybe we talk a little bit about, like, are they really competitors, or do they complement some of this stuff?
Yeah, so for me, I think they're just actually like fantastic examples of how you leverage embedded finance to power your business, right? And a lot of these, and I think the embedded finance opportunity is so broad and diverse. It spans use cases, it spans industry verticals, it spans customer segments, consumer, small business, enterprise. So it's too big for any one player. There's enormous opportunity. And at its core, I think embedded finance is really all about collaboration and partnership, right? If you deconstruct any embedded finance use case, what you're going to see is layers of partnerships. And so even in the case of Apple, they partner with MasterCard, they partner with Goldman Sachs to bring a lot of these services to market. So I think there's a really strong case to be made that there's plenty of opportunity to go around, and we can all win together in this environment.
Yeah, and Rob, you made an interesting point when we were talking earlier about how many accounts that individuals use on their phone that are financial service related.
Yeah, absolutely. I think, average, millennial couple has 30 to 40 connected accounts, right, to their bank accounts. So it's just, it's going to be increasingly important that you work with partners like, an open banking provider, banking as a service provider, embedded finance players, all of these enablers that can help you, orchestrate these seamless experiences into your environment, because that's going to be a real key to success, is how well does the financial service offering, how well is that integrated into your ecosystem, into the user experience?
Right.
Yeah, I would say from our perspective, sorry. The Apples, the Googles, the Squares are really, all they're doing is driving both adoption and awareness, right? So when you're entering into a new technology, you need somebody like that to pioneer the way. I mean, one of the positives of COVID, right, is you've seen everybody sort of quickly leapfrog over to a frictionless environment where they could use their phone to check out, one-step process. So anything that's an arduous, painful process, these guys are usually very good at reducing that friction. I think as an example, I'll date myself a little here, but 17 years ago, we were representing a bunch of banks who were trying to get into NFC, and the carriers own the keys to the market, and you couldn't do anything about it, and this iPhone thing rolls out. And all of a sudden there's an open ecosystem, and with Starbucks, we went directly to the App Store, used a barcode to pay at the point of sale, and frankly, this is all the carrier's power going forward. So I think there's pros and cons, obviously, but more pros from our perspective.
Yeah, and I think I have a slightly different view, which is I think it's Apple and Square and a variety of other big tech players who are in fact leading the way and opening the door and actually giving us examples of what can be done when you have strong affinity to a brand. I mean, your business is a great example of that. Starbucks is one, but I think even if you look at Dunkin' or if you look at Torchy's Tacos, those people and those businesses have rabid fans. And they are willing to do what Rob is talking about, put money on an account that is controlled in that environment, spend on that account, earn loyalty points in that account, because they actually have a real strong affinity to that brand. And I think that's what Apple and Square and others are showing us, is if you are able to attain that type of brand affinity, that embedding an account, taking control of those funds and using those funds to drive the greater business and the KPIs for the greater business, that you've got a great business model that has a lot of potential upside in it from a revenue perspective, from a customer satisfaction standpoint, and actually, quite frankly, just from a streamlined process standpoint. But I think the other piece of it, which is kind of where I slightly disagree, is I don't know if I disagree, but have a slightly different view, is that I think it's actually the banks, the big banks, against all of us. Right, so the Apples of the world, the PayPals and Squares of the world, and all of these big brands that are starting to embed accounts are actually creating a challenge for the banks, right? And the banks are not just losing their deposit base and their card bases. In the case of Apple, they're even losing savings accounts, in the billions of dollars in a few days. Those are all coming out of the major banks, and I think the interesting part is the affinity and the variety of features and services that a Apple or another brand, even if you're thinking about a gaming brand or some other brand, that can bring to the consumer is something that they don't have. That's a transactional relationship that people have with their bank, and it's all about financial services, and I don't think they've cracked that nut yet.
Right.
And I think their current strategy really is to band together. It's kind of all the association model is coming back, right? It's like, hey, early warning system is going to create a pays wallet for all of the major banks. They're going to create, so I think that's going to be their strategy, but I really see them having a difficult time stopping this sort of slow progression of consumers adopting services with other brands and pulling deposits and other financial tools out of their control and putting them in the control of those entities who are serving the customer in those environments.
Right. And Rob, you kind of touched on this a little bit earlier, but maybe you can speak a little more about how open banking can complement embedded finance.
Yeah, absolutely. So, I mean, look, embedded finance is essentially about meeting the customer where they are, right? So if you're meeting the customer where they are, that's going to require a speed and a precision that's an order of magnitude greater than what you see from like a traditional financial services model. And one of the big keys to success, as I mentioned earlier, is how well is that offering integrated into your user experience, integrated into your ecosystem, and that's where open banking as a supporting, enabling technology can play a substantial role. Because once a consumer permissions access to their financial account, that unlocks a host of data services that can be delivered seamlessly via API to support the user experience, make it safer, simpler, more secure. And so you can do things like authenticate the consumer in real time. Hey, does the information associated with the bank account match up with what I was expecting, right? Are we seeing any red flags associated with things like synthetic identity fraud or account takeover, right? Then there's funding the account. Obviously, it's absolutely critical that you fund the account as quickly, as early in the user journey as possible to solidify the relationship. And with open banking, you can do things like obtain account and routing numbers digitally to fund that account quickly, right? You're not asking a customer to type in that information manually into the user experience or go through some multi-day micro deposit verification process that has a 50% abandonment rate. You can do things like check the real-time available balance and enable immediate access to funds. So, hey, I see Walt has $20,000 in his account. He wants to fund his new account with me for $500. Let's make that $500 available to him now. Keep him active. Keep him engaged. And last but not least is underwriting, right? So if you're going to be offering any type of credit product in your user experience, whether that's buy now, pay later, cards, merchant cash advance, it's absolutely critical that you and your partners have as complete a picture of that consumer or small business's financial health as possible. And with open banking, you can see things like income histories, deposits, withdrawals, cash flow analytics, et cetera, that are going to put you in a very strong position to safely extend credit and provide better access to capital and drive financial inclusion in your environment.
Yeah, I think that's spot on. I mentioned earlier the things that I think are changing rapidly in front of us and adoption of these products, new services, money movement that happens in real time. All of these things happening in real time create new risks. And I think that's probably one of the other big thing. Unfortunately, we don't like to talk about it because we don't love it, but fraud is just a new reality for us that is increasing because of all of these new technologies, because of these new gaps, and I think also in part because the users of these tools are now actually having to adopt new fraud tools, services, and strategies to protect themselves and to protect their customers. Because the old card fraud tool sets that we've been using for years have been refined, and they work well still for that. But once you step outside of that and move into a real-time money movement transaction that's not reversible, those technologies don't work, and the consequences are high, right?
Absolutely right. I mean, we're talking about a lot of things have to happen in seconds in this environment,
Right.
in seconds. And that includes authenticating the user and protecting both the user and your company against fraud. And that's where things like identity validation and account owner verification and all these things where you can actually in real time scrutinize identity elements associated with that consumer to say, hey, do I see any synthetic identity fraud flags here? Do I see anything that's indicative of account takeover? And doing that in seconds without requiring, hey, come in and visit a branch or like upload these documents, et cetera, et cetera. Like that's going to be, critically important that that process is enabled and it's in the background and it's seamless, because you don't want to end up in an environment where you're constantly requiring step-up authentication after step-up authentication, because that's just going to create a ton of abandonment and drop-offs.
Right. And I know, Walt, you kind of touched on this a little bit, but when I'm speaking with my clients that are looking to get into various components of kind of their digital transformation, a lot of their concerns are risk. Like, partnerships, how can we trust them? Regulatory issues, like what are we opening ourselves up to? So can you talk maybe a little bit about some of the considerations that people should have when they're kind of going into this?
Yeah, I think there's a couple of different things. We would, I would classify one as a strategic thing and one as a very tactical thing. And the strategic thing, it'll sound obvious and self-serving, but I think picking the right partners is really important. And I think what we have seen is there's a lot of new entrants into the program management space, the sponsor bank space, the processing space, and I think really closely identifying those entities who can help you to define and design your program appropriately from both a legal and a compliance standpoint, but also from a fraud and risk standpoint is really, really important. And I think that the due diligence factor on these service providers is a really important first step.
Right.
It seems obvious, but I think we have seen a lot of people say, hey, I can get up and running really quickly on this platform over here, so I'm going to connect to it and I'm going to stand up a product in 30 days, only to find out my second iteration of this product has to be launched somewhere else, right? And I have to sign new contracts, or the service offering doesn't work. And so we actually think, and for anybody who's been in the financial services space, unwinding a financial service offering is difficult and challenging and time-consuming. Yeah. And you don't want to do that. And quite frankly, you don't want to have to do it over as well. So you really need to make sure that foundational, kind of product that you're putting in market is something that can really sort of live on. And I think the tactical thing that I would say, and this is a very similar thing in many respects, is that choosing the right account type for your particular application is absolutely critical. And what we have seen is that the market has suddenly adopted a DDA account as the all-purpose account for everything. If you go out and look at the new entrants into this space, they build a DDA. They didn't look at GPR accounts. They didn't look at disbursement accounts. They didn't look at incentive accounts. And all of these accounts are going to provide you different offerings. So if your goal is to create a family account that has sub-account functionality on it, the DDA may not be your best option. If you're going to do lending and loan products are going to be loaded onto these accounts, the DDA might be a great option for you. But they also come with different user flows. So the flow and the user process is really important. We talked about step-ups. So in a prepaid account, you're able to actually set up an account with an individual without having to take their social security number, which can be a big burden, and then step them up as they use the service offering. And I think the other thing is economics. The economics of each of these products is very different. And quite frankly, DDA is not always the highest earner. So if you're running a product on interchange, there's a real strong need to look at the various account types from all of those perspectives, but also from a pure economic perspective.
Right.
Yeah, and I think, again, our perspective would be a little bit different in that it's, again, a restaurant or a hotel looking to solve some issues, but it's really counseling them right out of the gate. Understand what is your primary success metric. What are you actually solving for? If it's
Right.
driving more orders, driving more registrations, whatever it would be, a lot of this ties back to like vendor fatigue and whoever's first at the gate, right? So if it's a loyalty play, they're going to be asking this particular partner, you need a native app, you want to fire up registration right out of the gate, your abandonment's going to be off the charts, 80%, right? If you start hitting them up with something before they've been through your UX and know there's value added.
Right.
Then it's the next step is really understanding what your roadmap is, right? And that roadmap, to pile on to what Walt said, really ties back to your partners and whether or not your partners are willing to actually partner with the best in class, right? So,
Right.
as an example, we have a mobile tipping product for hotels. Netspend would be an ideal partner for digital issuance of a card once the tip has been sent to the actual staff member, right? And that's something we do all day long. A lot of these guys are going to come to the table, back to Pitfalls, around like a point of sale that's, quote unquote open. And once you sign the documents, you're using them for payments, you're using them for loyalty, you're using them for order ahead, and it may not be where your roadmap needs to be. And then I think the third point is really the touch point for your customer. So, your board's beating you up to have a native app, but 80% of the transactions are going to flow through mobile web, kiosk, drive-through, whatever it would be. Really be logical about your approach and don't try to boil the ocean with, particularly in our space, every mobile digital solution that you have to do it right out of the gate at once. Roadmap it, stair-step it, do dot releases.
Yeah, I think you're spot on. I mean, you need to first and foremost, if you're entering this environment, understand, hey, where do I want to get started, and what's going to add the most value to my users,
Right.
and what's going to be the next 1 to 2 things that follow, right? Because typically you'll see things like payments and account opening and funding being an initial catalyst, that leading to things like lending leading to things like bank accounts and debit cards, et cetera. And there's really strong synergies across all of these things as well, because if you can think about lending, depositing lending proceeds into a bank account, the bank account fueling debit card spend, which gives you another data point on transactions, et cetera. And then you can, if you're managing payment acceptance, you can actually service loan repayments out of that flow as well, like pretty seamlessly. So there's a lot of really powerful, strong synergies between a lot of these offerings, but you need to think through what's going to add the most value to my users, what may be the next 1 to 2 things after that. And then I think, when you're looking at the space in particular, you got to answer a few questions. It's really like how much do I want to do? How much control do I need to have? What risks am I willing to take? And how quickly do I need to get to market? And I think if you have thoughtful answers to each of those things, it's going to put you in a really strong position to go out and figure out and move forward and figure out who and where you want to partner.
Yeah, I think the other point is, and looking down the road, right? So
Yeah.
understanding what your roadmap either will be or could be, because I think planning that up front, again, comes into your account type choice, your flow. We talked earlier, there's certain use cases where an account opening strategy that starts with open banking might make sense. And in other cases, it may not, because as we said with the step-up account, a customer may be like, hey, I'm not getting a good enough value exchange for this, and I'm not willing to give you all my credentials. And so I think all of those pieces early on should be considered so that you're picking the right product, the right strategy, and quite frankly, like we said earlier, the right partner to launch it with, because you need to have all those service offerings, those features laid out so that you've got all of those early foundational decisions made correctly.
Right, absolutely.
Yeah, and I want to dig a little bit more on some of the challenges, but I think, what we see, one of the biggest issues with some of this when companies try to implement is that they implement in silos, or they find some cool tech and they're like, we got to do this. We want to just do this. And they don't have an overarching innovation strategy. So it really starts with an overarching innovation strategy that goes across the whole organization, and you come up with that, and then you put the cool tech, you align the cool tech to that. But that's what's a starting point of understanding where you're at and what your ideal future state is. And with how much this environment is changing on almost a daily basis, that future state is going to change rapidly too. So you got to constantly evaluate that and make sure you're evolving your thought process with how the market's changing. But maybe can we talk a little bit more on like some of the challenges that people face when they do try to do some of these things?
So I think just to touch on that point about having an innovation strategy and a plan, when you're getting into this, know that it's all about partnerships and it's a long-term game.
Right.
So you want to make sure that you're working with partners who like are stable, who have a solid track record of performance and of innovation. I think it's going to be increasingly important that you're working with partners who take a collaborative and proactive approach with respect to the regulatory environment and with respect to compliance. It's going to be incredibly important. And then last but not least, safety and security. You want to make sure you're working with partners who are going to prioritize safety and security for the end user first and foremost, because it's absolutely critical in this environment where things, again, need to happen in seconds and they need to happen seamlessly.
Right.
Yeah, and a lot of this is so nascent for people we partner with, and they don't have teams like a Starbucks or a Dunkin' with 20 people in marketing, 20 people in product, right? So picking that partner who's actually done it before and will augment your team, similar to how you guys approach, right? Augment your team almost in a consultative way versus trying to force what their product roadmap is for the next 2 years down your throat and convince you that it aligns with yours is incredibly important. So I mean, I'm just echoing the fact that the partner out of the gate is probably the most important thing you can do, right or wrong. And all the traps that come with that, right? The payments pieces we already talked about, the ownership of the token, and whose customer really is this when at the end of the day, if you move off this service provider, you got to be careful what you're signing up for.
Yeah, I think when we're talking to, when we talk about embedded finance, oftentimes you're talking about working with an organization who is not a fintech, right, or a financial service organization. So you may be talking to payments people in their world, but often these larger corporations haven't matured to the point where payments is at the forefront of product, right? Or payments is at the forefront of loyalty.
Right.
And so I think there is a fair amount of coordination that needs to happen within some of these organizations. And you see some of the classic challenges where, hey, my product guy wants to build something, but the IT guy is like, not happening, right? You know, we're not on the same page. So I do think some of these things, and when we were answering, I think the very first question we were talking about, like, what's the pitch to a CEO? I think you need to have that top-down sort of buy-in from the organization because these things are going to be cross-functional. They're going to touch your loyalty, they're going to touch your marketing, you're going to touch your product team, they're going to touch your payments team, your tech teams, and you really have to have a coordinated strategy there, or you're really sort of doomed for a challenging installation and success. I'd say the other thing is, and I think this is something that John and his organization has done very well, is that being that knowledge expert, but learning how to work in that environment with an entity like that and to actually solution it out, right? Bring it all together, educate all of the personnel in the sort of value chain that has a hand or a stake in the application itself, and to really coordinate that on their behalf, and then to take them through all of the variable aspects of a financial account, right? Setup, fraud, because these are all net new things to them. So I think it really does take in certain environments like that, that type of organization and structure who has the ability to sort of navigate a large company through it.
I think you hit on it. Education is probably the biggest part right out of the gate with a lot of these partners, right? And I think it's unusual for them, particularly in our space, to work with a partner in a true partnership, right? They're used to the Cokes of the world or the cup guys that are providing, and they can beat those vendors up, quite frankly, right? And it's sort of one-stop shop. This is truly, we have to understand your roadmap, you have to understand what we can bring to the table, and we'll bring the right partners to augment what we can't do for you. So I think education is absolutely up there with partnerships.
Yeah, and you guys touched on it, but vendor management is like one of the key things, and we see it a lot because we go in and do some vendor management projects where you find these companies that have some really great tech, but then when you look underneath the skirt, it's like, oh my God, like you have so many breakdowns in controls and there's so much ability. And with regulators, you can't outsource your responsibility or your risk. And that's where a lot of people fall and get themselves into trouble is they go into these partnerships, they do them too quick, they don't have an innovation strategy, they don't really do the due diligence on the front end to make sure that they're partnering with somebody that they should trust and give that information because it can be cumbersome,
Yeah, I think you're making the case for program managers.
Right.
Like our business, which is really nice of you. I appreciate that. It was not set up. But I do think that's true, right? I mean, if you think about, and John's business does the exact same thing, even though it's a slightly different type of financial product. But the entity has to rely on you. But in a program manager situation where you're on the hook as well, it's really important for you to have that sort of confidence in your partner, right?
Right.
So for us to go back, use our legal, compliance, and regulatory resources, work with our bank, and then actually work with our partner to make sure that the product is defined, designed, and properly structured so that we stay out of trouble, they stay out of trouble, but more importantly, to John's point, that they have the confidence in you that you can execute on their behalf and keep them safe.
Right.
Because they're not experts in this space, and many of them are, hey, I'm a restaurant, I'm not a financial services guy. So they're really relying on the partner to do that for them.
Yep.
Yep.
And I know we're running up on time. There is the ability to ask questions. I haven't seen any come through, but if anybody does have questions, we can see a hand waving.
We talked a lot about brands and like payments and cards and kind of stuff. We're very transactional, less burden. I'm curious what your thoughts are when you look at like the BNPL movement that got embedded, but that's all Affirm, Klarna branded to the lender versus Apple's card is branded to the brand. Torchy's would be branded to Torchy's, right? It would all be white labeled. Do y'all see any movement? Do you think that'll ever change where a brand would actually want to take on the lending brand and the lending component of it? Or do you think that'll always be separated as someone else's burden?
Well, I will tell you, we already know there's certain cases where entities don't want to take on lending, right? They're inherently opposed to taking on that kind of risk. So outsourcing that to a third party is a very natural and viable option. And I do believe there are trusted brands out there that are working in the space that have their own brand that are meaningful to customers, right? People are starting to get to know those brands. Right. They see them, and they're typically repeat users of those services. So I do think there's space for these, lending institutions, and quite frankly, it's much broader than just lending, where they can actually build a brand, provide a service direct to customers, and support these other entities that have, sort of their own either service offering or their own brand. And I think a great example of that in the market today is Toast. They're doing a fantastic job of building their own brand, their own product, but it sits underneath, some of these major restaurant chains, and I'm personally a big fan of it. And every time I see it, on the menu where we're at, I use it. And I think there's a lot of opportunities like that for entities to serve other organizations that don't want to either take on the burden or risk of owning a whole product.
Yeah, I think that's spot on, and I think for most software companies, for most platforms, they're going to have to look to a partner to get into a lending offering. There's always going to be, or typically will be, a financial institution providing the capital and the sort of the regulatory compliance that goes along with that. Where I think a lot of these software vendors are in a very unique and powerful position. Is you have this very sticky and data-rich relationship with the end user. If you take a simple example of a software vendor working in the home services industry, where they're providing software that allows that small business to submit quotes, send invoices, schedule meetings, make and receive payments. That software provider has such a unique array of rich data points that that would allow them and a partner to safely extend credit to that small business. It puts them in a very, very powerful position to provide access to capital. And I think if you pair that information with the information you can see through open banking, again, on incomes, free cash flow, deposits, cash flow, et cetera, those entities are in a very strong position to have a seamless experience. And the experience will be absolutely seamless, right? There's no long applications, there's no uploading documents, submitting audited financial statements. And what you're seeing in a lot of cases is a shift to pre-qualification. It's a shift to pre-qualification. There's no more application anymore. It's just, hey, you've been approved, click here. Funds are in your account the next day. But it's got to be done, I think, really thoughtfully and carefully, because what you don't want to have, if you're that software provider, you own the relationship with the customer, you want to make sure your goals and the rules of engagement with your lending partners are aligned, because the last thing you want is a whole bunch of your users to get rejected for that lending offering, because that's not going to be great.
Well, I think we're running up on time. We'll be around after this if anybody has some additional questions and want to come up. But guys, this has been fantastic. Thank you so much for making time, and I really appreciate your guys' insights. So thank you.
Thank you.
Thank you.
Thanks, everyone.
Thank you.